welcome back to Duke's Copy TV. Now this week, the leaders of the four largest Eurozone economies are meeting in Rome to discuss a common ground on the debt crisis. Michel Juvet, a partner at Bordier at Sea, joins me in the studio today to discuss the outcome of this meeting. Hello, Michel.
Hello.
Thank you very much for joining me.
My pleasure.
Now, first of all, what will this meeting entail today? What can we expect from it?
Well, basically, it's a new meeting which is supposed to prepare the next meeting, which is going to happen next week. But imagine today we're going to have Mrs. Austerity, Mrs. Merkel. We're going to have Mr. New Normal, Mr. Hollande. We're going to have Mr. Spanish, who is going to ask for more money. And we're going to have Mr. Technocracy, which is Mr. Monti, representing Italy. And all of these four people are going to try to ask more money to Germany, because at the end of the day, this is the objective of this meeting, is to put more Germany in a position to spend more money and to share more risk with the other European countries.
I see. And while preparing for this summit, French President Francois Hollande said that a debt redemption fund was one option for a closer fiscal union in the Eurozone. And what exactly is this fund? And if it's created, how will it make a difference?
Okay, this fund, basically, the idea is to reduce the interest charges on all the debt of all European countries, because this is the problem today. We have some economic growth, which is quite small in some countries, but even with this growth, they have no means to pay the interest charges. So basically, the idea is to create a sort of pool of funding for these countries. But this fund, the ERF, is an answer to the Eurobonds. The Eurobonds proposed by Mr. Hollande are limited in quantity and limited in time. This ERF, which is a proposal coming from Germany, is interesting because it says all the debt which is above the 60% ratio defined by Maastricht is going to be rolled over in a new fund, the ERF. And this fund is going to pool all the debt for all European countries above this 60% line. And the interest of the idea is to say this fund is going to refinance these countries with a lower interest rate than if they were going to raise money by themselves. So it will help these countries to finance easily their finance for the next few years, probably, because the size of this fund is going to be quite large. It's about 2.5 trillion euros, but it is going to be limited in time. The idea is to have a fund limited in 20 years and 25 years maximum.
I see. And ministers will also turn to the question of forging a banking union. This will help recap the banks, particularly in Spain. What will this banking union entail, and how will this affect savers, do you think?
That's an important point, because today, if there is a crisis, a banking crisis in one country, it is up to this country to solve the crisis. So, for example, today we have a crisis in Spain, and it is up to the Spanish government to solve the problem. The idea with the banking union is to say, when something happens in one country, then these banks located in, for example, in Italy, ask to a European body to refinance them and no more their national government or the national central bank. So it's an important point, because that would be the first step for a banking union. And how we're going to refinance and recap the Spanish banks will be the answer to this banking union, and probably the first step. So if we assume and we suppose that tomorrow Europe decide that the previous funds we have at disposal, for example, the EMS or the EFSF, refinance directly the Spanish banks, that will be the first step for a banking union. And the second step is to announce that all deposits are guaranteed by a sort of insurance in Europe. Today, when a bank is going into bankruptcy in Europe, the deposits are guaranteed by a local institution. So the next step is to say it's going to be guaranteed by a European institution. And that will be a tool to make citizens more comfortable with their own institutions.
So lastly, how will all these events affect investments?
Well, as usual in Europe, all summits are very important. But here again, it can happen something very interesting if Europe decides to go further with this decision on European Banking Union, or if they decide to create this ERF. That's going to be a turning point for Europe, because that's going to solve a lot of the problems we have today. And in that case, all markets or all investments which have suffered a lot from these rising spreads between yields in Europe will recover. For example, financial stocks, for example, Italian assets, which have suffered a lot. So if we have some progress and good steps going in these directions, these assets will recover heavily. But as you know, in Europe, Europe is good at announcing things, but Europe is bad at implementing things. So a lot depends on what they're going to say and what are they going to do. And if they announce a lot, but they don't do anything, then markets will go back on a downtrend again.
Well, thank you very much for your insights today, Mr. Juvet. It's been very interesting. Thank you for coming into the studio.
Thank you very much.
Next on Dukes Copy TV, we have an interview with Hervé Petra from Credit Suisse, his view on Greek elections and the euro versus the dollar. Until then, goodbye.